All right, good morning, everyone. This is kind of going to be a trial run of just breaking down the information that I've been posting in Discord for my little morning market vibes. I use this as a gauge to kind of understand sentiment and what is moving the markets. Full disclosure, I get all of this from Bloomberg, so this is not information that I'm personally creating myself. So all the credit goes to Bloomberg. None of this should be used for financial advice. It's purely what I use to get a feel for what's going to be driving the direction of markets in the days, weeks, and months to come. So, just running through the highlights today. So, economy hearings, Treasury Secretary Janet Yellen and Fed Reserve Chair Jerome Powell are set to face lawmakers in Congress for 2 days of hearings starting at 12 p.m. Eastern Time. Yellen is likely to push the case for more spending, repeating her argument that the U.S. has lost a lot of room, or excuse me, has a lot of room for borrowing with interest rates so low. In his prepared testimony, Powell said that while the economic recovery is progressing well, it is still far from complete, and so the Fed will continue to provide support. I'm going to talk more about Powell and what that means for markets in just a second. Yellen will be closely questioned on the administration's spending plans today, as President Biden's advisors are set to present him with a new infrastructure-heavy spending plan that could reach $3 trillion. Biden has pitched the plan as not only an economic boost to help the pandemic recovery, but also a long-term commitment to ensure the U.S. remains competitive against China. Unlike the 1.9 trillion stimulus plan, it is very unlikely infrastructure spending could be passed through the Senate with a simple majority, meaning that Biden will have to get Republican support to get this deal over the line. Trial doubts, not too important here. You can pause the video and read this if you really want, but we've been going back and forth on the AstraZeneca vaccine and the reactions that we've seen. From what I've seen, the rates of serious adverse reactions seem very low. Doesn't seem like a big deal, but it has been very much a big deal. So the big takeaway here is that the U.S. Is still working out distributions to the EU, which is going to be key for the European markets rebounding by getting those vaccinations back on track. Market slip. We're going to talk a lot about this when I get to the indices section. So looking at coming up, the U.S. fourth quarter current account balances at 8:30 a.m. with new home sales data for February and the Richmond Fed Manufacturing Index for March, both at 10 a.m. While Powell will have the monetary limelight in Congress today, New York Fed President John Williams and Fed Governor Lael Brainerd are among the other Fed speakers of note today. There's a parliamentary election in Israel today, and as most of you know, GameStop does report earnings today. So a few notes. These are, again, not my words, but I couldn't agree with them more. So the Fed has never tried to hold down long-term interest rates. People imagine that the Fed wants to keep the rate lower, but it's never said anything like that. And in fact, given multiple opportunities to comment on it, Powell has maintained that he sees the rise in long rates as being indicative of an improving economic outlook. Despite the rise in rates, a holistic look at the financial conditions shows that things remain loose. The Goldman Sachs Financial Conditions Index, which includes such factors as exchange rates, equity valuations, and credit spreads, as well as interest rates, shows barely any tightening since the run-up in yields really began. Here's a nice visual for what we're talking about there. There's no evidence that higher rates at the long end of the curve are slowing growth or doing anything else that might impede the Fed's desire to get to maximum employment. If you look at industries which you'd think would be rate sensitive, such as home builders or cars, these stocks are still on fire. Here's GM, Ford, and the home builders over the last year, all basically at their highs. At this point, there's no sign of trouble. You have a rise in long end rates that the Fed has said it's not concerned about. You have financial conditions still at extremely loose levels, and you have no sign of higher rates impeding the economy. So far, anyway, nothing that should stress the Fed in the market. I'm going to talk about that when I give my outlook for the day and the month. Let's just take a quick look at indices. This is just something I use to gauge, again, a very macro look at what's going on. So the Dow, these are yesterday's numbers. This first numbers, Dow was up 0.32, S&P 500 daily up 0.7%, the Nasdaq daily plus 1.23%, and the FTSE minus 0.21%. I didn't start including the BITW 10 daily. This tracks the top 10 large cap cryptos. So that has been kind of on a steady downtrend for a week or two now, just as Bitcoin has kind of pulled back a little bit. But you can also see monthly and yearly numbers. Just of note here, NASDAQ has almost made up, gotten back to positive on the month. Everything on the year is still looking very healthy. Obviously, this crypto index very healthy long term with Bitcoin coming down. That's obviously going to be pulled down. Commodities, both oil commodities down big. This is one of the bigger numbers I've seen in recent days. Gold up a little bit. Corn hasn't moved. Currencies, definitely some loss for the Euro USD daily tracker, the USD Japan, the pound USD ratio also down about 0.5%, and the USD Canadian dollar daily up about 0.5%. Looking at futures, this is one thing that to me is a really good outlook for how the markets are expected to perform at open. So the Dow down about 0.41, SP 500 down 0.37%, Nasdaq right at even, and the FTSE minus 0.25%. Looking at rates, Fed current rates, these haven't changed. So the Fed current rate 0.08, 1 month prior 0.08, 1 year prior 0.15. These have been pretty steady for the last couple of weeks. The current target has not changed in a year, telling us the Fed has not changed target rates, which is what Powell has said every time he's opened his mouth. These are prime lending rates, also haven't changed. Unemployment current, these numbers have remained pretty steady. And looking at 10-year bonds, the Treasury 10-year bond yield came down about 4.32 basis points in 1 month. It's still up about 30 basis points, and one year up about 85 points. Again, this is from historical lows that we knew were going to come up, so nothing too crazy to, panic about. So last thing I'll say, with my daily outlook, I am bullish on the day. I am bullish on the week and the month, mostly because I think the market has a bad habit of really just panicking every time Powell exhales, inhales, opens his eyes, whatever it may be. Looking at what he has said over the past couple of weeks, he's given no indication that the Fed is going to step in and do anything that could harm the markets. They do want to see the economy fully recover before starting to mess with long-term rates. They've maintained that very consistently. And in his prepared statement for his testimony today, he said, and we'll read this again, so I'm getting this exactly right. In his prepared testimony, Powell said that while the economic recovery is progressing well, it is still far from complete, and so the Fed will continue to provide support. So, if you had to ask me, what do I think is going to happen after these meetings wrap? I would say it's very likely that, similar to what we've seen in the past, people are going to be panicking going in. You're not going to see a lot of buyers, and when he says for, the 5th time that the Fed has no plans of getting in the way of economic recovery, we're going to see more buyers step in. Pretty simple. That's kind of what happened the last 4 or 5 times he's spoken. So that's pretty much it for this video. Just a quick recap of what I'm seeing to start the day off. This is mostly going to be a trial video, so I'll upload this one. We'll see if you guys like it, if it's helpful. I know just reading on Discord sometimes can be time consuming, so if it's helpful to have this in either an audio or video format to start your day, let me know in the comments below. Please like the video, subscribe to the video, and check us out in our live stream. We are going to be live today and mostly every day, all day that the markets are open. So please come hang out with us, chat. We like to help other people learn how to navigate the markets for themselves. All right, we'll talk to you soon.